Let's get across the market open. Zach Rio is joining us from Banyan Tree Investment Management. Zach, welcome back. Good to see you. So markets, remaining bullish investors at the moment, aren't they? Are they right to do so, do you think?
No, I think they are. I think there's a case for being bullish. I think there's a case for being bearish. At the end of the day, earnings are coming out resilient. The economy is pretty resilient. You're fighting against the Fed. You're fighting against, apparently now you're fighting against the Fed. You're fighting against the US Treasury. You're fighting against Donald Trump. So there's plenty of support for the market. But at the same time, look, valuations in parts of the market, or many parts of the market, are in bubble territory. But I will absolutely point out that there are parts of the market that are absolutely struggling as well. So it is a bit of a K economy, as they explain in the US. Everything feeds off it. But I think this is an interesting chart. Look, I always get told by people, this time is not different. And so we go back into history, or those guys that look back in history and look at the data. Very simplistically, this is showing the S&P 500 returns, Andrew, if up until the end of October, the returns have been greater than 15%. If that has been the case, going back to 1950, every time that's happened, what happens in November and December? 95% of the time, you will get a positive last 2 months of the year. And 71% of the time, you'll get a positive November and December return. And so if history is a guide, if this time is not different, and this chart holds true, then investors should expect a positive return for November and December, and therefore the Santa rally holds true, and therefore stay long the markets.
All right, so you're constructive on the US, but is recession still a risk in the US?
Yes, absolutely. Look, we're not putting that off the table. I think our concern is next year. You need to be a bit mindful of what goes down from an economic growth perspective, what happens to long-term bond yields, because I think you're going to hit a crescendo of sorts where, look, Donald Trump's polling came out overnight, or I just saw a headline anyway. It's dismal, and I think the US Treasury, again, don't follow the US Treasury, and Donald Trump will throw everything at it. Even the US Treasury Secretary said recently that he expect some big tax returns. They're going to put money into your pockets next year if they have to win this election. So all of that could come to a head some point next year, where bond markets really get roiled up, and at the same time that could have an implication for equities. Now the question really is for equities, how much does that impact equities if earnings are holding up? And that's the question you need to ask. So we haven't put recession off the table, but it's a low probability.
Meanwhile, those AI deals continue. We just had another one overnight. Amazon with the ChatGPT maker, OpenAI. Look, I mean, this is almost every day they're getting these billion-dollar deals.
So look, someone actually put it very neatly to us. Let's not talk about AI, what it's going to do to your life and my life, where the productive is going to come in, when is it eventually going to become proliferated through our lives. What does it mean for earnings right now? And all these deals, yes, there's a circular component to them among who they're being shared with, but right now, as long as those deals are landing in someone else's pockets, your capex is someone else's revenue and someone else's earnings. So as long as that party is still going on, earnings are likely to hold up. And don't forget, unlike the .com boom and bust, there has been a lot more trickle down from the current. I know there is a component of circular sort of money going between the big hyperscalers and whatnot, but there are other companies that are benefiting from it. And so there is a more widespread economic benefit coming from the current AI boom. So I'm not talking about whether AI is going to change our lives. When is it going to change our lives? Right here, right now, focus on earnings. And if that still holds up, then there's a big push. There's a big benefit to the economic model, certainly in the US.
So Zach, you just returned from a trip to Asia and the Middle East. What did you garner from fund managers and investors?
Yeah, look, it was really good just to get a bit of a temperature of what people are talking about. Not too dissimilar to what we discuss here. Couple of key points. Look, everyone is knocking this rally, but everyone is fully invested. That's the important point. The other couple of points that I'll highlight is that a lot of investors are expecting a cyclical trough in the US employment market. So you've seen the last few months of non-farm payrolls coming in lower than expected, big revisions to previous printouts. A lot of investors are pointing to us that that has troughed now, and you're likely to see that pick up. That's a very interesting point. The other point is a bit left field, but investors in Australia can take advantage of that, is how SMRs, so small modular reactors, could be a game changer for the African region, sub-Saharan region. You think about that, 1 billion people, mostly young population. If they can get an electricity solution, energy solution that can provide consistent, sustainable energy to them, it could be a game changer, economic game changer for that industry. So, which is why even yesterday we were talking about uranium. And uranium plays in Australia a little bit more, early in the innings here, but Cameco globally, and then the Paladins of the world, the Boss Energies of the world, that thematic is definitely very, very strong and has a lot of legs. So I think those were a couple of key points. Besides that, gold is in a bubble, private credit. Our final point on private credit, a lot of people are looking to move out of private equity and into private credit, which is quite interesting.
You mentioned energy there too. Focus most immediately then on oil market, given what OPEC Plus has decided to actually pull back on those output increases next year. How are you viewing the energy market at the moment? Yeah, look, a lot of people are saying, look at the energy market. When you talk about bullish markets, okay, well, how can you look at the energy market and say anything bullish? Look, I think OPEC is helping out Donald Trump to keep energy prices low. And that's keeping hopefully a lid on gasoline prices and energy consumption. But what's very interesting is lower energy prices is also very much a competitive advantage for Middle East. They've got cheap energy, access to plenty of land. In fact, there was a notion presented that Middle East could become the next manufacturing hub for Europe and Asia. What do they have access to? Cheap energy. And they've got access to plenty of land and even cheaper labor, which comes from surrounding regions. So, of course, Saudis, UAE, OPEC want to absolutely maximize the output at maximum prices. But there could be other benefits that these guys could be seeing as to why OPEC keeps increasing the production and output.